All right, guys, welcome back. Today we're going to be going over turtle soup. And a lot of people try to make turtle soup complicated. ICT is kind of ambiguous when it comes to turtle soup. I'm going to break it down in two separate frameworks because it is really not that complicated. It's actually a very simple entry strategy. So our first framework is based around power of three. If you're a power of three trader, accumulation, manipulation, distribution, this is going to be your go-to for turtle soups. So each day is divided into three pieces, as you know: accumulation, manipulation, and distribution, which means that daily candle is divided into three parts: the wick, accumulation, manipulation, the body, and the opposing wick, distribution. The opening price of that candle is fixed. The closing price of that candle is fixed. So when you are bullish, you're expecting a range to form below that opening price. This is where you're going to be looking for your entry, right, in that manipulation phase of the daily candle. And the opposite is also true. If you are bearish, you're expecting a range to form above that opening price, right? When that liquidity gets swept at that proper time of day, this is going to be your turtle soup in the manipulation of that daily candle. Now, after you spot a change in the state of delivery, usually accompanied by an order block, a move will ensue, right? This is essentially all a turtle soup is. You are buying that initial high of the change of the state of delivery when you're looking for a bearish change in the state of delivery, right? And the same thing is true when you're bullish. You're essentially just buying the low of that change of the state of delivery. So here's a great visual example. You could see with that horizontal line, I marked out the opening price of the daily candle. You could see I also marked out our 9:30 opening price point. That 9:30 macro is active. We know a move should ensue. We see an opening range above the opening price. We have a bearish session bias here. We have an 8:30 news driver. That 8:30 news driver is what? Manipulation. 8:30 news drivers are essentially scheduled manipulation. You already know it's taking place. So what comes after manipulation? Distribution, right? So 9:30 opens. We sweep this high here. That is a valid turtle soup. That is a valid turtle soup short. And what are you targeting? Opposing liquidity. In the scenario, it is at the low here of this news candle at 8:30. Here's a bit more of a textbook example. This is a bearish scenario. This is a bullish scenario. We marked out our opening price. We see we do have a range form below that opening price. Our Judas swing takes us lower. Where does it go? Below this range formed below the opening price of the daily candle. You could see this swing low is your daily candle's wick. You could see that this swing low here is the wick of that daily candle. So we sweep this internal sell side liquidity here at the proper time of day at 10 o'clock when we're anticipating our first reversal at the end of the Judas swing. That is a valid textbook turtle soup long. We have opposing buy side liquidity here, straight shot all the way up after buying low of the day here. Moving on to our second framework, this is one I personally use when I'm engaging with the marketplace when I'm looking for those turtle soup entries. And that's going to be market maker models. Now, if you missed the advanced lecture, it was about 40 minutes long on market maker models. Every single ICT entry model is within a market maker model, right? So turtle soups, optimal trade entries, 2022 model, silver bullet model, every single publicly released model ICT has is just a part of a market maker model, right? All those pieces come together to make a market maker model. So in this scenario, we have a market maker buy model. The SMT that takes out the low is a high probability turtle soup. So if you're bullish, you want to be looking for those lower prices to form an SMT divergence, right? You want to be catching the low of that bull run here. So the SMT that takes out the low is a valid turtle soup. We can see that here. On the left, we have the NASDAQ. We have a low and a lower low, as opposed to the S&P 500. We have a low and a higher low. Once we sweep that low, we have immediate displacement higher. At that point, you immediately trail your stop loss to break even, because if it's a turtle soup, it should not return to your entry. Remember, that is the change in the state of delivery. You're essentially buying the bottom of the change of the state of delivery. So we know that's going to be followed up by an order block. The order block should not be traded through. Therefore, your stop loss should be automatically protected. We have another example here. SMT divergence. You can see on the left we have NQ, on the right we have ES. Low, higher low, no turtle soup. Low, lower low, turtle soup, right? And of course, this was before a data release. This is your 8:30 news driver. And I can tell you right now, these things are not random. If this was random, we would see something. We're just going to do one more quick bearish example here. SMT with NQ and ES. We have a high and a lower high. On ES, we have a high and a higher high. Once that high is broken with SMT, that is a valid turtle soup, and you're simply going to be targeting that opposing liquidity. So just to recap our framework here, right? The initial one, if you're a power of 3 trader, you got to be looking for that accumulation, manipulation, distribution of the daily candle. Wick, body, wick, textbook power of 3 concepts, right? We know the opening price is fixed, so you're expecting a range to form below the opening price if bullish. Once that is swept at the proper time of day, that is a valid turtle soup long. The opposite is also true, right? You are expecting a range to form above the opening price at bearish. This is where you're looking to sell on that turtle soup entry, right? Then you look for that change in the state of delivery, and then you're going to get that beautiful follow through of a move to that opposing liquidity. And of course, we have my personal favorite, the market maker model framework, right? Once you get that smart money reversal, the SMT that takes out the low in a market maker buy model is a high probability turtle soup. Again, the opposite is also true. For a market maker sell model scenario, the high that takes out the previous high with SMT is a high probability turtle soup. Now, turtle soup does not need to be complicated, right? You saw that here. There's a lot of mystery surrounding turtle soup. ICT's never addressed it directly. He's dropped subtle one-sentence lines here and there in his 2-hour lectures, which I've kind of just transferred over to this 8-minute lecture here. There's a lot of courses based around turtle soup. People want it to be complicated so they could try to sell you a way to learn it. It's not that complicated, right? I showed you here. If you have a good understanding of Power 3, it should be a light bulb moment. If you have a good understanding of market maker models, it should be a light bulb moment, right? And if this lecture still is kind of iffy for you, I would recommend choosing one of those approaches and getting deeper into the root concept, right? So getting deeper into that accumulation, manipulation, distribution power of 3, or getting deep into those market maker models. Those are the only 2 things you need to know when engaging with these markets, because everything else stems from those 2 bases there. Again, I like to keep it sweet, simple, to the point, and easy to digest. And as always, until next time, stay safe.